Isn't it fascinating? Just a few weeks ago, everybody talked about how great perpetual futures are, how great those efficient bets on the price are. Everybody bought the Hyperliquid token, everybody bought the Aster token, and now we've seen the result of all of this. We've seen a massive crash. This is the market cap of the smaller altcoins in an hourly chart. Who would have thought that the entire altcoin market cap can crash by 48% in the span of just 7 hours? The developments within the perpetual futures market were a first foresight of that. I've covered Aster regularly on this channel. And there's still quite a bit of interest. People continue searching for the platform. It's the second largest decentralized perpetual futures exchange. It's got open interest of 3 billion versus Hyperliquid. It's got 6 billion. Interestingly enough, there's more open interest on Aster relative to the total value locked. So the average investor is 1.5x levered on Aster, whereas on Hyperliquid, things look a bit more healthy. Here, the open interest is only 20% larger than the total value locked, an average leverage of 1.2x. Now, whenever we see situations like this, we have to ask ourselves, where is the money flowing? Who is benefiting from this? Now, there are two major beneficiaries. On the one side, we've got the insiders. So there were a few traders close to Donald Trump that opened short positions on Bitcoin and Ethereum just a few hours before the tweet, and that then sold their positions 30 minutes after the tweet. Well, the insiders, of course, make money, but it's not only them. It's also the casinos themselves. It's the market makers. As there is more and more volatility in the market makers with their arbitrage trading tend to generate lots of profit. Now, how much, if we are specific? Everybody can become a market maker by providing money to the hyperliquidity provider, and that vault took 1.5 years to generate 80 million worth of profit. Now, this flash crash here, it made 42 million in a single day. Just for Hyperliquid, so that's a smaller market maker. Unfortunately, we don't have something similar for the Aster protocol, but probably Aster has made at least half of that, because the open interest is half of Hyperliquid's. Here's the total value locked of Hyperliquid over time. Here's the total value locked of Aster over time. So that's how much capital is currently in the platform. This shot up massively recently. It now declined with the flash crash. It also declines now because one of the main reasons why Aster gets so much adoption recently is the airdrop, which also gets announced here with an animated button. And so the trading fees generated by Hyperliquid per day are roughly 4 million. The trading fees generated by Aster, they're also now in the 4 million range. And they used to be much higher, again, because of the airdrop. Once the airdrop closed the snapshot, we saw a massive decrease. But still, the trading fees of Aster after the airdrop are very comparable to the trading fees of Hyperliquid. And so the capital on the platform is more efficiently used, one might say. Now, trading with leverage on the price of various cryptocurrencies is extremely risky. Many people got wiped out during that crash. But if you set this up the right way, you can make money. I personally, and also the community, made money with that flash crash. Here, have a look at the copy trading vault for the premium members. It made 200k during that flash crash, which equates to roughly 10% ROI on a single day. A very similar ROI that the HLP has made. Now, I very much like Hyperliquid. If you know what you're doing, you can make a lot of money. It is a clear player versus player game. It's just contracts versus other players. If you make money, somebody else is losing money. Aster is the same. Aster is more risky though. I might create a referral code after this video, but first I want to use the platform myself for a while. The reason why Aster is so risky is because it offers more risky products like 1001x leverage on Bitcoin. But there's also something I very much like about the platform, and that is the offer of bets on stocks. We can bet on the Tesla price, for example, and the funding rates here are negative. So the shorts get money to bet on falling prices of Tesla. And that's something I find interesting. We've got access to Tesla, but also to other tech-related stocks, and we can potentially play a delta here. Now, if you're following this channel for a while, you know that I tend to bet on falling altcoin prices while I bet on rising Bitcoin, Ethereum, and Solana prices at the same time. So most altcoins tend to underperform the larger cryptocurrencies over time because of token inflation. Now, we can potentially do something similar for Tesla, because Tesla has a good chance of being overvalued as well. And there isn't another place to bet on this in crypto besides Aster. Tesla now has a 24-month forward-looking price-to-earnings ratio of 55. So we are paying for the next 55 years of earning. In other words, the market strongly prices in massive growth for Tesla, much more than for other tech companies. And here's Tesla relative to QQQ, so the Nasdaq 100 ETF. The first massive wave of growth came with the success of the Model S. The second massive wave came with the success of Model 3. And so if Tesla doesn't find a next big hit, it's probably going to bleed in price given the high valuation. The big story is of course humanoid robots. For example, BMW has already a test phase using Figure 2 robots in their assembly line. But this is really just a pilot project. This is done outside of peak production hours, and this is not scaled at all. And again, this is not even the Tesla robot. This is a robot from another company. Some YouTubers are even comparing the Tesla Optimus robot with Figure 2. But what I want to see is real usage of robots outside of just little test projects. We've seen tests across Tesla all the time that then long-term failed. Maybe you remember the Tesla Roadster 2.0. Maybe you remember the Tesla semi-truck. Maybe you remember the Tesla taxi. Elon Musk tries to generate a lot of hype, pushing up the valuations, which then gives some breathing room with refinancing. But I'm not so sure if that's also going to work with the robot. I think we are still way too early in the process. And really, the stock only started to rally after the production of the Model 3 ramped up massively. And so I think we can wait for this to happen with the Optimus robot. We are very far away from this. I think the case of an underperforming Tesla right now is much stronger. We could easily see Tesla fall 60% versus the rest of the stock market. And so that's what I like about Aster. Aster is trying to push the industry forward, offering new products. And so let's see how those products will get adoption over time. There is the backing by CZ of Binance. We've seen an industry-wide deleveraging recently. And so from here, open interest is likely going to only rise. Here is the Aster price relative to the hyperliquid price. I think there's a very good case to be made that we will see outperformance of at least 40%, potentially beyond that. Potentially, we will cross that resistance as well. Now, isn't it fascinating how for most altcoins, the movements to the upside tend to be much, much faster compared to the movements to the downside. We shoot up and then over a long time, we trickle down. Here's the example of Dogecoin relative to the others market cap. So when there's news, when there's a lot of attention, the Dogecoin price shoots up within 1 or 2 days to then come back down over several months. We're seeing the same for the Trump token. We shoot up. This was the announcement of the dinner. And then subsequently, we come back down. There is a difference though between Dogecoin and the Trump token once we zoom out. So again, this is Trump relative to the others market cap. So the market cap of all of these smaller altcoins, and here is Dogecoin relative to the others market cap. So while we do have our pump and dumps in both cryptocurrencies, the long-term trend is very different, as in Dogecoin just goes with the overall market. It simply just trades in a somewhat constant range, while Trump tends to long-term underperform. And there is a fundamental reason why Trump underperforms long-term, and that is tokenomics. It's new tokens that hit the market over time. Have a look at the following data. This is the number of Trump tokens that get released over time. We started off with 200 million. Now we are at 363 million. So it's the early investors, it's the team, etc. that cashes out over time. And that selling pressure, those vesting unlocks, that dumping on retail, that's what's creating the long-term underperformance. Now, some people say that markets are efficient and that everything is already priced in, but I don't think those charts show that. There is inefficiency, and we can simply turn this around. Let's say we've got Bitcoin relative to the Trump token. Then we're getting this chart here. So since Trump launched, Bitcoin outperformed the Trump token by 560%. This is how I believe we can make money in crypto. It's not trying to find the one outperformer among all those altcoins that always go down. It's doing the exact opposite. It's trying to be allocated in a way that we make money when the insiders and the early investors make money as well. When they are dumping on the average retail investor, we make money because things like Trump tend to underperform long term. As long as the token dilution continues, as long as new tokens hit the market, this chart is very likely going to go up. I'm making money with that strategy already for 4 years. This is a monthly chart. Had I just dollar cost average into Bitcoin, I would have gotten the return here in light gray. Instead, I got the return in black because I also bet on falling prices of various altcoins. It is a mistake just looking at US dollar charts. Really what matters is your portfolio value measured in Bitcoin appreciating over time? If the answer is yes, you're probably doing something right. If the answer is no, then you might just so stick with Bitcoin and dollar cost average into Bitcoin and stay away from altcoins altogether. The Trump meme coin is just one out of many examples. Most altcoins have an increasing supply, and so here with Balancer relative to Bitcoin, so we go long Bitcoin, we bet on falling prices of Balancer, we can get this long-term chart. The strategy looks quite straightforward. There are a few caveats though. So for example here with the Bitcoin to Balancer chart, we do have a lot of volatility along the way. Where does this volatility come from? It comes from small market caps. There is some token manipulation. There is some short squeezing happening along the way. And the smaller the market cap is, the more volatility we invite. So while the strategy is long-term profitable, we have to be aware of the potential pitfalls as well. And so I made dedicated videos on the topic. How can we actually make money from those inflating altcoins? Most altcoins do poorly and we don't have to find the needle in the haystack. The one altcoin that does well, we can just bet on the haystack continuing to go down because again, the early investors, the VCs, they cash out and they dump on the retail investor. There are two important videos to watch: using perpetual futures on Hyperliquid and risk management with relative valuation bets. It's half an hour each, so in total 1 hour of content. And after you've watched that, you know what to do in order to set up positions like this. Now, this here is currently my favorite trade. So this is the position that I will recommend to you once you have joined the premium membership. So you watch those 2 videos, you join the community. Afterwards, I will send you what to do in order to set up this trade. If you don't make money with that trade after holding it for 1 month, then I'll refund you your membership fee. I'm that confident in the strategy that you can simply just open that position, and if you're in the red, I don't want your money. The fee, by the way, is $125 per month. Again, if you don't make money with that trade, I will refund that. But of course, it's a monthly fee. So I share all of my trades in real time with the premium members. So for example, over here, this is where I closed a short position on the movement token. Move was also highly inflationary. We opened this over here where we were at the upper end of the trading range on a relative valuation chart. So we always look at the altcoin relative to the rest of the market. And then when we make quick gains, when we get closer to the lower end, we might also take some profit and wait until we go back again to the upper end of the trading range. I know at the beginning this strategy can be a bit daunting, but again, there is support in the different chats. There's also moderators that can help with any questions you might have. So feel free to check it out. The link is directly over here. Just click on the screen. It will lead you to the premium website. If it's your very first time here, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.